Administrator Whitman. Good.
I did.
Good morning. This is the Finance and Risk Management Committee meeting, excuse me, for the Marin County Employees Retirement Association. Call to order, Administrator Whitman. Please call roll call.
Trustee Martinovich.
Here.
Trustee Poole is absent. Trustee Robbie is absent. Trustee Vasquez.
Here.
Trustee Werby.
Here.
Mr. Chair, all members of the committee are present except for Trustees Poole and Robbie.
Great. Thank you. Do we have any committee member requests to teleconference?
There are no teleconference requests.
Great. Everyone had a chance to look at the minutes.
Move to approve by Werby.
Second by Martinovich.
All in favor? All against? No? Any discussion?
Did you not?
Oh, I'm voting. Yes.
Sorry. Mr. Chair, the motion passes. The motion to adopt the March 25th, 2026 minutes passes unanimously 3-0. Trustee Poole, Trustee Robbie absent.
Great. Thank you. Do we have any requests for public expression? Excellent. Thank you. Moving along. New business. Administrator Whitman.
So I will turn it over to Chief Financial Officer McBride to take you through the majority of the material.
Thank you.
All right, good morning, trustees. So this will be a review of the third quarter of the current fiscal year ending March 31st. So just a couple of notes. You might have noticed we took out the investment manager fee schedule out of this. We're kind of reviewing that, looking at ways that we can make that a little more effective for your review. So we will be adding that back in the next meeting, but right now we're pulling that. We'll kind of go through that. The other thing that we did at the last meeting, at the second quarter review, will continue, is we didn't put the credit card transactions into the presentation. However, those are included in full in the package that you have. So if you have any questions on those, that's where they are located. So let's kick it off. Next slide, please, Chris. Okay, so just we'll start with the admin budget, section B1 in your packages. And as you can see, everything is within budget. Just, if we're looking linearly at the fiscal year, we should be about 75% of budget. And you can see that everything except for interdepartmental is below that. And the interdepartmental is almost at 100% because we just pay that in a lump sum, and we paid that during the third quarter. So that's the reason for that. Next slide, please. So you have detail in your packages. However, what I like to do is just kind of pull out any items that have kind of exceeded that 75% benchmark and take a look at those to see what's causing those. A lot of these things you've already seen in the second quarter. They're kind of continuations where we paid something. It was either a timing issue or it was over the benchmark, and we've already addressed that. So I won't go into too much detail here. Innovest, you can see that we're at 92%. Again, that's timing issue. We paid those 1099 expenses in November and January. So that's about what we'd expect. Records retention, as we've told you before, is 13.5% increase this year. That was a little over what we budgeted for the increase. So that's driving the budget a little bit higher. Insurance premiums, again, timing issue. We renewed in January, so that's why you see the slug of that budget amount already being used up by this point in the fiscal year. Subscriptions, I put their PBI overage. So PBI does they do our death audits, and there was a overage fee. We are allotted a certain amount of those, and we were in excess of that. It was about a 10% increase, about $300, not too sizable. So most of what's just driving those subscriptions is just like you think Wall Street Journal and things like that have gone this year. And we're seeing that reflected.
Did we get that subscription, by the way?
What's that?
The Wall Street Journal thing? Did we get that?
Glad you brought that up this morning, because staff just reminded me we needed to make the decision about the online subscription. So we'll make that decision and have that available for you. And we got to we did get a rate from the journal.
But do
So-
we needed enough signups, I recall.
And I think we did, so just need to close, it's just dropped down in priority amongst other things. So we'll
okay.
get it, actually just talked to staff about that this morning, we'll get it wrapped up today.
Document repro costs, we've talked about. The transcribing medical record review, so that one is just driven by work. That's Crosspoint for service disability work. So there's a lot in there. We've had 13 of those this year. What's driving some of those costs higher than what we budgeted is that some of those we usually have a medical review. On some of those, though, we've had to have actual independent medical examination. So that's a costlier component. So that's driven that up a bit. We also have a $12,000 piece in there. We have an agreement with San Mateo Serra, and I think Sonoma Serra also, where if they have a board member or trustee who has service disability issue, we handle that for them, and then we will recover that cost later. So that's a $12,000 component of that too. So again, most of that though is driven purely by the workload that they're experiencing there.
Excuse me for a second, Jeff.
Yeah.
Yeah,
Trustee
no,
Werby.
So on that thing, it seems to me that every application we've seen of late has had an independent medical review.
So
Or a
It
lot of
starts,
them have.
it starts with an independent medical review, and then the second step is sending to medical examiner.
there's two reports. The first is the medical advisor. That's what we normally get. And then we've had two cases where it's had to go to independent medical examination. Those are more costly, or that's going to add costs. on
Oh,
top.
so it's, and that's the one that's adding the extra expense,
Mhm.
not
Right.
the thing. So,
Not all of them go to the second.
Right.
They all
Very,
go to
very
the
few of them do.
independent-
Correct.
Oh,
A first step.
other way around. So the first step is it goes to our medical advisor.
Right.
And they review the record and they decide at that point, there's either enough record to justify granting, or they say there needs to be a separate independent because I'm uncertain about it. So recently you have seen more where it's just gone to the MA and the MA said, no, this is clearly, it doesn't need, and so it doesn't go to the second step. But if the MA is uncertain about it or feels like an expert, because that's really what we're talking about, the
Mhm.
independent medical examination is the expert in whatever the claimed disability is. If the medical advisor is not comfortable, then they will recommend that it goes to an independent medical examiner. That is then us taking the full record, all of it, and giving it to the independent medical examiner, and the independent medical examiner conducting their own in-person examination
Mhm.
of the person, and then writing a separate report.
And that happens in what percent of the cases?
It's usually about half, I would say.
And are we budgeted for it happening in half?
So remember that it's very difficult to predict
Mhm.
what's the volume of disabilities that we're gonna have, because it's driven by factors we can't control.
Is it very volatile?
It can be during the post GFC. We saw a spike in disabilities. And that was workforce related, I think. I think it settles back down, but also remember that one of the things that we can't control is that, and we presented this to you not long ago, is that the presumptions got expanded.
Mhm.
So now there are more presumptions that can apply to a case. So somebody who maybe previously didn't have or had a condition, but it wasn't a presumption, would have had to go through the medical examination process but now a presumption may apply.
That
So,
makes it easier, right?
well, I don't think it makes it easier because there still has to be the evidence, but if the condition is one of the presumptions, then the doctor presumes that whatever the condition is, it was caused by this.
And then it shifts
And
the
then we
burden.
have the ability to attempt to rebut it if we think we can. But that's a different thing. So it's exactly as Chuck described. It's that we've had some MAs that also recommended IMEs, that's cost. And then we also have recently processed a disability application for San Mateo County Employees Retirement Association for one of their board members, which is the reciprocal agreement we have with them and also with Sonoma. So we've processed that. We'll bill them. They'll reimburse us for that, but the costs are being shown.
Oh, so the costs are being shown here, not the reimbursement, not the.
Right,
expected
because they have not
Yeah.
reimbursed us yet, right? So you're seeing higher costs for us because we have not been reimbursed for that.
Question. Are the rates for those independent reviews pretty consistent or are they rising?
They've been actually pretty consistent.
Mhm.
It's been consistent, but we've seen that rates are going up and we need to talk to Crosspoint about that. And it's something that Chuck and I talked about just yesterday, is that we need to make sure that we understand why there are rate increases. I mean, I understand that there's inflationary pressures
Yeah.
everywhere,
Yeah.
but we need to know what those are because
Yeah.
that will influence our budgeting
For sure.
for these costs.
It's
Thank
definitely workflow is the driver on this though.
Right.
Okay, and then miscellaneous food, I won't belabor that. We talked to you before. A lot of that was our seasonal staff party and board party or luncheon, I should say. Okay, so now we will step out of budgeted into non-budgeted expenses. So just running our eyes down the list there, everything looks pretty comparable to last year. You can see retirement payroll expenses are up by a little over 3%. Again, with the COLAs, that's completely to be in line with expectations. Computer expenses, that is primarily for our CPAS system. And that is down just because we have a renewal component in that of about $63,000 each year. Last year, we paid that in Q3. This year, we received the invoice. We won't process it until Q4. So that's just a accrual issue there. And then security expenses, again, that is just an accrual issue where last year we had only had 1 month of the quarter in there. That's that $4,000. This year we have all of those costs in there, so that's why you're seeing that. It looks like a market increase. And then the last line there has gone down by about 13%, and we'll dissect that in the next couple of slides in more detail. Slide, please. Okay, so county council, we put county council and Richardson. We have a new attorney relationship for disability work. And that is transferring over to Richardson from the county. But the workflow is down about 5% from last year. Ice Miller, very small component there at $600. That's just, it looks like it's response to auditors for our annual audit. And then Nossaman overall is down by about 9%. And again, we have that on the next slide. We'll dissect that a bit. Slide, please. So general counsel work is up by about 29%. We've got the One McGinnis Parkway leasing that we did last year has dropped off. Bankruptcy work has dropped off, but again, very small item there. At employee law advice and training, last year, if you'll recall, we had research relating to AB 2561 that was done for the board and staff. So that was a cost that was kind of a one-time occurrence. Insurance policies, again, just based on the workflow. Technology projects dropped off. We had new linear agreement. We just talked about CPAS. Last year, I think that contract had been in place for a number of years before it was looked at again. So we did that last year, and that's why you see that $1,300 expenditure there and none in this year. That is Nossaman, if there's any questions. Okay, slide, please. Okay, actuarial and professional services. Again, a lot of this is things that you saw last year that you are not seeing this year. So the reason that you have a big drop in Chiron is we had that Milliman actuary review last year, and Chiron did a lot of work on that. They also did some ancillary work on things like the Santa Fe sanitation contract that they did some work on. So that was $40,000 higher last year. Same comment on Milliman. Again, we have that audit review. I believe it's every 5 years. So every 5 years, you see that cost for Milliman pop up. Didn't pop up this year. I think everything else there is in line. State Street custodian there, we haven't saved 50%. Again, that's just accrual. We had 2 invoices last year, 1 this year. So that's why you're seeing that drop. But you'll see that go up in the fourth quarter. And then investment education expense, that's the proxy reviews that are done. So that has stayed constant year over year.
In the investment manager expense, is the error included in the it's been taken out, backed out on the, in last
No,
year?
that'll be that we're talking about later at
Yes.
SSGA. No, that is not reflected in here.
Not yet.
Got it.
Yeah, yeah, but that'll be a revenue. You See it.
It's,
Offset.
it's
Yeah.
included in
Yeah.
here still.
Right.
We have to talk about how we're gonna handle the accounting for reversing it.
Right.
Because we have received the payment from them. So that's,
So it's not really a reduction,
No.
No.
it's that we were overcharged last year.
portion of that.
Because you expect this expense to go up as the
As
fund
fee,
gets.
as
gets-
fund
Right.
balances go up, correct?
You also, though, just remember, trustee, that some of the items in the investment manager line item for the fees are things like our private equities, and sometimes
There's
there's
timing
lag
issues,
quite a
right,
bit,
right,
right?
right.
So
But-
you'll see a
But
comment.
that would probably be comparable, like if they were slow this year, they're probably slow last year too.
It depends.
No,
So like this year, when we get to a further slide, when we talk about the capital calls and distributions, you'll notice that our data will be from September. And the reason is normally we have that report. Actually, I think every time I've had the report, and it's just under the wire before we come to this meeting, but I have the calendar report. This time I don't have it. So it just, it depends.
Right.
Okay, due diligence on this, trustees, I'll let you run your eyes over. it. You have it in your package. I did not see anything that jumped out to me on this. If there are questions, we're glad to answer them or research them for you.
There's only one thing on this, it's on the staff one, is that, there's a IT roundtable that we listed, Vladimir attended and a charge for that. And Vladimir did attend that, but that charge is actually not for him. That will show up in the next quarter. The charge is for my attendance at a CalPERS administrator round. So it's accurate that he attended this, but that line should say my name on it and have the
The $50.
administrator. What's that?
Is that the $50 one?
It's the $50. That's my responsibility. I sent the wrong information to county for the charge. Charge is for me. We're good.
Okay, slide please, Chris. Keep going till private equity. Okay, private equity. So we'll start with Abbott. So again, as the conversation we just had, you'll see over then that right column that normally would be December 31st, 2025, but because we didn't have the calendar report, prior to this, we had to use the old data from September 30th. So that hasn't been updated from your second quarter presentation. So just looking at Abbott, first of all, you can see that we've got capital calls in the third quarter at $14.6 million, and we had distributions of $37.8 million. Slide, please. Pathway, same comment. On the right column, we had calls of $10.1 million and distributions of $25.2 million. Slide, please. Opportunistic, we did get the opportunistic net asset values for March, so those are included there. And for the opportunistic funds, we've got distributions of $13.6 million for the third quarter. Okay, and then other transfers, again, I'm not going to belabor this slide because this is data that the trustees have seen in the previous quarters. Nothing below AEW core has changed. A lot of this is the rebalancing that we did, I believe, in October. The only changes to this slide, and you'll see it in the detail in your packages, is in Trumbull and AEW. We added $640,000 in dividends from Trumbull, and we had a $944,000 addition that you'll see in your package for AEW core.
and pause for a second here. I do want to give you a heads up that when you meet again, you will see that there will be some more transfers. Remember that a couple of years ago, you adopted a change to your investment policy statement that requires staff and Callan to review the portfolio on a monthly basis to see if there's any rebalancing. With the recent market run-ups in international, we were well over our targets. And so we did execute here just within the last week, rebalancing out of the funds that were outside of targets and into the areas that were below targets.
Can you tell us what those are?
Say that again. I'm sorry.
Can you specify the actual mechanics of the rebalancing? I
We
know
re-
you go from
we-
overweight to
it'll be
underweight,
in-
but
it'll be in
what
here.
were those asset classes?
Yeah, so we reduced all 4 of the international equity managers. That's where the run had been.
Mhm.
So each of them took a reduction, and we distributed those amounts to your 2 fixed income managers. So it was about 160 million in total. Well, it was 160 million in total that we reduced out of the international equity, and that went not an even split, but it went 85-75 to Dodge and Cox and well.
Well done.
I didn't want you to see it in June and ask why we didn't tell you in May.
Fair enough.
Okay.
I like that. Thank you, Jeff.
Slide, please. Okay, so subsequent transaction post March 31st, and again, the breakdown of this is in your package. So Abbott, we had one capital call on the Investors 2023 fund of $1.1 million, and then some distributions of $2.2 million. Okay, and then for Pathway, we had capital calls of $700,000 and about $3 million in distributions. So the totals there for private equity was $1.8 million in capital calls and $5.2 million in distribution after March 31st until present. Opportunistic, we've had $1 million in distributions. Fortress and Varde. And then transfers, redemptions, and dividends on Trumbull and AEW Core. Got $687,000 and $1 million respectively for $1.7 million.
Good question, Chuck.
Yep.
On the subsequent transactions, both for Abbott and Pathway, for Abbott, that 1.1 million capital call
Mhm.
for their investors 2023 fund on May 11th, 26th. Is that the first one? Is that the first capital call for that particular fund?
I don't know the answer to that.
No, it's not.
It's not.
It's not.
They've had,
It is not.
so they're already working.
Yes.
Okay, good. Same question for fund L11,
I-11.
I11 on Pathway. Transaction date April 7 for 708,000.
I need to look
Let me-
that is possible because that fund was slow to
Right, ramp
and
up.
that's possible that's the first capital call. I would need to go back and look at the history.
Isn't that in the previous slide?
It is. So in, so I-11, you can see that you've had $9 million in
Yeah.
paid in capital.
No,
If you
that's
Go back
not.
to the previous slide.
Right. What hasn't been funded yet is 12, which is the last fund you went into.
Gotcha. That's fair enough. Okay. Excellent. Thank you.
Yeah, and Abbott 23, on looking back to, it looks like we've had $7.5 million in capital on that one. So.
Good. Thank you.
Slide, please. Oh, we're not looking at that. That's part of the detail report. So that is the end of my slides.
So the
Administrator
next,
wants to-
yeah, the next item is B3F, class action security litigation settlements. There is nothing to report
Mhm.
there. B3G vendor services provided to MCERA. For the quarter we're reporting on March 31st, there were no new vendor services. We have engaged a new vendor. We already reported that to you. the Siegel Group to help us with the assessment of our CPAS system, and that work has started now. But it was not within the quarter that we're reporting. Sarah staffing status B3H. Nothing new to report on this. We still have the one vacant position we're still holding on to. So that's remains the same. B3I audits, examinations, investigations, or inquiries from other government agencies. There is nothing currently new to report there. Other items, B3J, other items from the administrator related to risk or finance. The only thing that I wanted to report here is that one of our tenants was acquired, Navitas, which we expected that to happen when we leased to them because they wanted only a 5-year lease. And so they were purchased, and we have entered into an agreement to assign their lease over to the company that purchased them. So the lease has been assigned.
What's the expectation? Are they gonna move or are they gonna?
We're working that out with them. We think that they may want to vacate, which we have a lease for them. So we're gonna, Woodmont is gonna work that out with the new owners about how they want to approach that. But we certainly have the lease and we'll be enforcing that until we can find a new tenant. So that's the only item under B3J, which then takes us to B3K, Form 700 summary. So you'll recall that each year the board and staff and consultants are required to submit their Form 700s. And after the forms have been submitted, council and council's team go through them and produce this summary report for you, or the Risk and Finance Committee, and ultimately the board. So that is today's discussion. Is council will at least go through what they've put together and highlight any particular things that they want you to be of note of.
Thank you. So as the trustees are aware, this is a summary of, as the administrator noted, all of the Form 700 reporting by the identified individuals. So that's all trustees, all staff who are Form 700 filers, and then the consultants who are listed. It does not include investment managers' reportings, though. And they're identified and listed by category that is identified on each of those individuals' Form 700. So you have the categories on the top, 2,000 to 10,000, 10,000 to 100,000, et cetera, et cetera. The blue highlight is intended to identify where there's overlap between an identified financial interest and a business in which Sarah engages in business. And so that is to note where there would potentially be a disclosure and recusal circumstance. And we have seen that in the last year with one of these listed financial interests in Fortress specifically, where a trustee who has a financial interest in Fortress has disclosed and recused in connection with presentations by that manager. So that's it. The blue highlighting is not supposed to sort of definitively guide legal conclusions on those topics. They need to be assessed on a case-by-case basis, but it's intended to provide you with a better means by which to have oversight on this topic than simply having Form 700 sitting in some file somewhere and not be really viewed in the context of what really matters, which is whether there are contexts that require people not to be involved in decision-making or not allow decision-making to go forward at all. So any questions?
Just comment. I think this is a wonderful form. I don't know if you do this for other clients or other jurisdictions, but I think a lot of issues could be resolved in the public sphere just by this. So thank you.
Thank you. No, I think this is gold standard.
Yeah.
I don't think that it's an excellent practice.
Yeah. Indeed.
And for clarification, it is my team. It's my paralegal
Yeah.
puts this together. I'm not reviewing each of these form signatures personally. I think that would not be a good cost benefit analysis, but certainly to have this as the final product
Yeah.
prepared in that way is good.
Well done. Excellent. Trustees, any questions? No?
So that's, Mr. Chair, that concludes B3.
All right. Number 4, investment manager fee payment. Administrator Wickman.
So you're familiar with this from the board meeting, but we wanted to bring it to this committee because we think this is an issue of finance and risk. But just as a quick summary, we discovered that the fee that was being charged to us for our investment in the State Street Global Advisor MSCI World XUS Fund was higher, substantially higher than the fee that we had agreed to. The fee that we'd agreed to was 1.25 basis points. We were being charged 12.5 basis points. We also discovered that that was in the agreement. So the question about why it wasn't discovered from an audit standpoint is the auditors did look at it and the invoice would have matched the agreement. And so that's why that was not questioned, is that everything looked in alignment, but it was not. The error began from the very beginning when the fund was, we invested in the fund. So it started in March of 24. So it's only been 2 years that we've been in that fund through December of 25. It resulted in an overpayment of $751,011.66. State Street obviously is has repaid us that amount, and they also have added interest of $69,269.30. So we received a total repayment of $820,280.96. Well, we reviewed that at the board meeting in May, and the board agreed with the interest payment. What we wanted to talk to you about is what we've been doing since that time, as we discovered. So a couple of things. One, we are reviewing all of our existing investment management agreements for the fee structure to make sure that the agreement is in alignment with what we expected and actually what was presented to you on the investment committee. So we're going back and looking at all of the presentation materials that you received as the investment committee and what action you took. And if you adopted what was presented, does the agreement reflect that? So we're going through all original source documents, which are really the votes by the investment committee, because 99% of the time the committee hires a manager and accepts the fee that they presented. There are rare occasions where you hire a manager and ask staff to try to negotiate the fee. And if that was the case, then we try to identify how that was done also. So we are in the process of doing that. Your public managers those are a little more straightforward in terms of validating the fees. The private market managers is a little more complex. So it just takes us a little bit more time to do that validation. So that's ongoing. We are also confirming all the fee calculations, and the payments that we've made for the current fiscal year are correct and in alignment for the agreements that we have in place. And we've actually, Chuck has gone out to all the managers and asked them to provide backup material for that so we can check the calculations. In addition to those things, we have amended our agreement with SSGA to reflect the correct fee amount. So that's been executed. One of the weaknesses that we felt caused this is that we didn't have enough eyes on the agreements. Is that once the board had made the decision and we hired the manager and we started doing the agreements are reviewed by me and I sign them under your authorization. Council does review them, but council is reviewing them for terms. And really,
So isn't the fee rate a term?
the fee is a term.
Couldn't council have picked this up?
No, this is on me. I should have picked it up. It was
I
right.
agree, but given that you didn't, isn't this one of the, I mean,
I th-
that's a very material term in the agreement. Shouldn't council I mean, that's why we had them review it in case you missed something.
I think that a more appropriate place for that to have been caught would have been for somebody else, most specifically what we're recommending, the chief financial officer, review the agreement before I sign them, in particular, review the financial conditions of that, because all the other things have all been ironed out. So somebody else needs to look and make sure that the financial agreement matches what action you took as the committee. And I think that falls on us. I don't think that falls on council.
Why we're having
I-
council.
I'd like to respond as well, because this has concerned me a lot as well. In looking back at the situation, the terms of the agreement were negotiated by our investment council team. The fee schedule was added as a schedule to what we were negotiating. So it was not independently reviewed. I think what I need to make sure is that the materials that are presented to the investment committee are also provided to the investment council team when they're negotiating, so they make sure that there's a match there between what was presented to the investment committee and what's negotiated. I appreciate that the administrator is not faulting council. I'm not faulting my investment council team, but I do think that we need to make sure this doesn't happen again with all eyes in every aspect of it. So, again, looking back at it, had the materials presented in the investment committee been something that I forwarded to the investment council team in conjunction with the documentation, I think somebody would have spotted it. But they just weren't looking for it because it was a schedule that had been provided by State Street. And they just, so
The schedule that provided by State Street had the number right or wrong?
wrong.
Oh,
Wrong. That's the problem.
That's how it
was
happened.
Wrong on the schedule.
on the schedule that was.
They-
The
presented.
decimal point was in the
Decimal
wrong
point,
place.
That's where it was.
Correct. The
yeah.
decimal point was in the wrong place.
So now if the CFO looks at it and says it matches to this thing, we'll still get it wrong.
No,
No.
we won't.
He'll have,
because
he'll have to look at the.
He is going to look at what the investment committee approved.
Mhm.
Because in all of your manager hires, your presentations include the fee that they're going to charge. He will go back to that document and look to make sure that that number that you adopted is on that document. We're also going to change how the minutes are presented so that when you hire a manager, we will say you hired the manager and the fee was X. So it's in the minutes also. But the CFO's review will be to go back to source material, which is whatever you adopted. That's the action you took, and validate that that's the number that ended up in the agreement.
And council will do the same
Council,
thing,
right,
but-
council will do the same
Right,
thing.
right.
Council will do the same thing, and I will do the same thing, but we'll add additional checks on this to make sure that nothing goes through.
And State Street has also changed the way they present the fee now so that it's not in the form of a decimal. It's
Right.
actually by basis points.
Right.
So
Please.
And
that's what's more visible, 12 basis
and-
points versus 1.2.
And we're gonna do the same thing, is get away from this conversion of something to a
Uh-huh.
decimal,
Percent.
which inherently has a challenge with it the minute
Yep.
we do it. So, our proposal is to add an additional layer, given that I'm very close to it. Council's involved in the meeting with it too, but investment council is looking at all of the terms, not just the fee terms.
Mhm.
But another person should be able to validate source documents, agreement, numbers match.
So we're adding two layers.
Mhm.
That's right. And we will make sure that the meeting materials get to investment council as well, because I'm here, investment council is there. Sometimes investment council is here, but I just, on our end, I want to make sure we're doing absolutely everything so this doesn't happen again as well.
So I have I understand the notion it was human error in the final analysis. It was human error. And that happens even in military contexts and so forth. you could be consistent and wrong, and you could be consistent and right. It seems like we were just consistent and wrong with all the eyeballs looking at it. So I understand human error. That's to be expected. This is a human institution. What concerns me that this is a very simple, not only asset class, but also investment vehicle. And we are now entering in 2 weeks. We're going to be evaluating a lot of private credit managers where the agreements are arguably more nuanced, more complex than a simple State Street allocation. And so the buffer for more human error is even greater in private market transactions. And I've raised the issue in prior board meetings where capacity constraints becomes an issue. And we've been presented with the argument that it's cost, it's, a lot of overhead that we don't have staff for. So, this to me, I just want to make sure that potentially can be perceived as a canary in the coal mine for the type of transactions that are coming down the pipeline that we are arguably investing in private markets, both private credit and private equity. This, I understand, we can live with this. But with the added layers of complexity and the added layers of opacity in private markets, we just got to have some more assurances than just a decimal point in a State Street agreement. So that is my bit. I know we have very skilled staff. This is, you guys are phenomenal. Our performance is what it is. Our funded ratio is what it is. Our service is what it is, and it's been superior. It's been stellar. But as we increase our levels of complexity in investment vehicles, we have to button this up.
So the last bullet point I just want to cover on here is, and Chuck already mentioned this, is that we're revisiting that fee calculation spreadsheet that we've been giving you now for 7 years. Because for one, we could have picked it up there. That's one of the places we could have picked it up. But when we really start to dive into that spreadsheet, which once again was created 7 years ago at the request of one trustee, my concern is that our fees, so we are showing you on that, or we used to show you on that, this annualized fee, but our fee structures are way more complex than that. You have half of your managers that have graduated fees up to 25 million, this 25 to 50, this. Okay. And then we show you an annualized number.
Yep.
So I question how valuable that is to you. Certainly it shows you what we expended to those managers by a quarter, but us turning something into an annualized number isn't, I don't want to say it's not accurate, but it's not a reflection of what the fees, the individual fees might be. And when we've talked about changing it, we're like, well, we could turn it into a 10-page document with but I would think that's not valuable for you either. So I think one of the things we wanted to have, at least here, is some discussion about what do you want to see there? What if you want to continue to receive that fee spreadsheet, what kind of information do you want to see on it so we can try to line that up? We've talked about a number of different items. We've talked about changing the fee column to saying the fee wouldn't exceed a certain number. Like we know that above 100 million is 85 and that's what it would be. But it doesn't tell you 85 basis points, but that doesn't tell you that underneath that it's, 95, 100, and then down to 85. So we wanted to at least have some brief dialogue with you this morning, and we don't have to resolve this today. We can get input from you about what would you really like to see in that document.
Maybe the same way you identified the problem being when you use percentages versus basis points. maybe we should, show it basis points in that report too, because we have the same problem when we look at these things. It's a little difficult. If we'd seen it as 12.5 basis points, we might have actually caught it.
Yeah.
Right.
Yes, and
Right.
we had that same discussion, but
Right.
before we just did it and threw it in front of you, we wanted to at least put it out there. It's, if we're gonna recreate this thing, we want to
What do you want,
recreate it
yeah.
to what you want.
Do you have any recommendations on how you think it would be most useful?
I think basis points was one that Chuck used.
Yeah, when I went back and recalculated the sheet for the annualized, there it was, 12 basis points. And I think as soon as someone has seen that in basis points,
Mm.
Jeff, everybody here, and all of you probably would have said, that's not right.
Right.
It was pretty huh?
That
It
was
It
one.
was
Yeah.
pretty obvious. So, I mean, to me, that's the most useful to make that, because I don't know about all of you. I don't think any of us automatically translate percentages 0.00005 into a basis point. So I think when you see it in basis points, it's more meaningful. And as Jeff said, yeah, we have like our private equities, they have escalated structures, and they generally decrease from the bottom rung. But at least if you saw 50 basis points is the maximum fee, at least then it has some usefulness as a measuring stick. If you see something on there pop out over 50% or 50 basis points, then something's wrong. Anything below that is it's just a reasonableness check. It's not exact, but it gives you something.
And one of the things that, and this is another reason why we didn't present this, is that when we went back and looked to see what were you being presented in the investment committee, okay? So the managers, particularly private market managers, and your investment consultant will say, for this fund, the average fee is going to be 45 basis points. So they've annualized, they have themselves figured out over the life of what they think it is, but that's not the fee structure. The fee structure in the agreement that we signed is scaled.
Yep.
They just annualize that. So we're like, which one are we going to show you? The annualized or the scaled numbers? And we can take your feedback and go back and create something and bring it to you, and you can say, and next meeting, and you can say, okay, I think that works or it doesn't work. But I just wanted to say, well, we started down the Excel rabbit hole.
Right. And that's a real potential, Jeff, about the Excel rabbit hole. And I think that's a valuable use of staff's time, as long as I think my perspective is consistent, right? But what I am also very concerned about, and I'm going to ask counsel on this, on your views, is for certain in the private market investment asset classes, the definitions of fees versus investment costs are more nuanced, they're more complex, they're more, there's a lot more poetry, if you will. And so when we are analyzing the investment cost, because ultimately that's what it really boils down to, really, right? We can call a fee, we can call it a tax, whatever vocabulary language you want to use, but in the final analysis, it's an investment cost and what gets considered as a cost. In the private world, the private asset classes are more nuanced. And so if I'm hearing correctly, counsel only gets involved at a certain level in the public or in evaluating the contract and the terms of the contract at a certain level.
On private, that the council is involved in all aspects of the financial,
Including
the fees. What happened is not giving council the source material from the presentation. But when it comes to all your private market investments, council is deeply involved in all of the fees, and council and I have a conversation about the fee structure. And usually they're asking me, has your consultant really confirmed this fee structure? So we have a detailed discussion of fees on all the private markets.
Yeah, and the irony here, I think, is that as the administrator noted, in the private market context, the waterfall the various different aspects of the way in which the fee is
Mhm.
calculated is heavily negotiated, and that's something they focus on very specifically and discuss with the administrator and make sure the consultant is in line with the proposal. Here, it was perhaps the simplicity of the circumstance where it was simply a schedule that identified by by decimal point what the fee would be. It was not a it was
It
not
wasn't-
an item to be negotiated. It was just an add-on. Whereas, as you're noting, Chair Vasquez, it is much more complex in the private market and it's paid attention to very carefully. So I think there should be some way to communicate that, the upshot of that in a summary version to the trustees. The difficulty is figuring out how to do that best.
Right.
But we can assure you that it is something that is paid very careful attention to.
And that's fair. That's fair. And I understand with public market instruments and vehicles, I don't want to oversimplify it, but they're pretty boilerplate. And they're also regulated, right? They have to be. SEC rules, Security Markets Act 32, 33, 34, right? So it- the rules are clearly defined. It's when we operate in the gray area of private markets. And having been in both sides, I can see that. That's very plausible and very real, counsel, that when you are dealing with private markets, the eyes are closer. And there's more eyes on it. And this could have been just, human error, just taking things for granted. But this is precisely what I mentioned in the past about capacity constraints. Let's not have this, and I don't want to beat this dead horse either. And let's just keep it moving. And I know you guys will do better. We'll keep it going forward. Unless trustees, any other questions or comments? So, take away, excuse me, Judge, take away from this, you'll come back to us
We will
with some
bring you
recommendations.
back
Okay,
a new
basis
fee
points
with
preferable
basis points and
and
some-
consistent
and
across
some
all.
Consistency on how it's presented to you.
And if,
Yeah.
to the extent that you could also put your methodology or your reasoning in the private market so that it can also be aligned as basis points introduced in there. And that's not just fees, that's investment costs, including carried interest.
No, no, stop
Um,
you. That is not, we do not pay that. We do not account for that.
We do not.
We do not. We've had that discussion when you get presented the private equity fee information by Callan, is they show you what we pay the fund of fund managers. And they
Mm.
show you the other things that the GPs are taking out before we see anything. So we do not account for the things that the GPs are taking in their cost.
So the argument is that's already factored into
That's
the fee?
factored into the fee that we're paying Abbott or Pathway or the other private market. But that's not something we are paying directly. The fund is paying. to the
Okay.
GP.
The funds of fund structure, okay.
That is
Okay.
exactly
I
one
get
of the,
Yep.
one of the
fine,
component
that's fine.
pieces, right? Is that if you were not in a fund of fund
Right.
structure, we would be showing you all the fees. We would show all the, because we would be paying all of this.
Fair enough.
We would be paying the manager's fee, the waterfall, the carry, every bit of it would be accounted for on our books and presented to you. But the fund of fund structure,
Do they not tell us what those things are in the aggregate?
They were-
that's why you get the annual fee report, which does show you everything in aggregate. But when the manager
Right.
presents that to you, if
Yep.
if it's that structure, so let's keep it
Yep.
that it is that structure, then they'll only be presenting what does MCERA pay the manager?
Hmm.
Yes, to source the GPs and do the rest.
Big
of it.
manager.
Right.
Thank you for your work on this, all, and your attention.
I apologize that it happened. I don't want to oversimplify it, and counsel, I think, described it. And the bottom line is, my eyes did not move to the decimal point. So it's my responsibility, and we won't have that happen again.
Future meetings?
You'll have another meeting coming up in June. And in addition to the new items we may have some other reporting that we'll be providing to you. I think that one of the things that we need to close out is the impacts on the salary work that we did and how
From the
that's going
cost
to
study?
impact budget.
From the cost study?
Right. And then also if we have, I don't know that we'll have the report from the Siegel Group about CPAS done, but if that is done, then that would,
It's gonna take us like,
okay, so that won't be for the next meeting, but that's where that report will also come, is to this committee to discuss.
Is anything else? Meeting adjourned.